Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Alvopetro Energy. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with Alvopetro Energy, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Corey Rutan, President and CEO of Alvopetro Energy, which trades on the OTCQX Best Market under the symbol ALVOF and on the TSXV under the symbol ALV. Welcome, Corey.
Thank you, Bob, and thank you to everyone for joining us today to learn a little bit more about Alvopetro. So a little over 2 years ago, Alvopetro became the very first independent company in Brazil to deliver sales specified natural gas into the local distribution network. So when you consider a country the size of Brazil with such a long energy industry history, we're very proud of this accomplishment. To be able to be the very first to do this. I think the other quite unique thing about Alvopetro for a company our size is that we control the strategic midstream portion of our business 100%. From a results perspective, I think we've certainly been delivering well ahead of the pre-commercialization expectations that we set. We're in a strong gas price environment. We've got best-in-class operating profit margins, strong free cash flow generation capacity, a clean balance sheet, and all that together helps support our more balanced and disciplined capital allocation model, where we're looking to reinvest roughly half of our cash flows in organic growth and the other half in returns to stakeholders. So we're currently implementing an organically funded capital program today, and we've got a lot of high impact and high potential catalysts on the near horizon. And I think because of that infrastructure position I talked about earlier, we're uniquely positioned to quickly convert natural gas successes into production and cash flow. As a team, we've always had a very strong commitment to ESG. It certainly goes even beyond the already strict local requirements in Brazil, and we're delivering clean and more affordable energy into the local market. We've got a team with a long track record in Latin America. I first started working together with our chairman, John Wright, back at Pacalta Resources in Ecuador in the late 90s. We then moved on to Petrominerales in Colombia. Both those companies grew from zero to over 40,000 barrels a day of production in a very short period of time. And we managed exits on behalf of stakeholders totaling about $2.8 billion. In addition, our local team in Brazil has been operating in our basin for over 15 years. So we've got a very strong team in place. So just, one of the things I would say is, I certainly think Alvopetro offers an attractive investment proposition, no matter what you're focused on, whether it's value, yield, or growth. Like I said, we've been delivering some pretty strong results here. We've got a clean balance sheet. At the end of September, we actually moved into a net positive cash position of over $12 million. We've completely repaid all outstanding project financing debt. If you look at it from a yield perspective, you can see that we introduced a dividend to our shareholders about a year and a half ago. We increased that by a third earlier this year, and we just recently announced another 50% increase in that dividend, up to US 12 cents per share quarterly, and that translates into a yield of over 9%. From a value basis, we're trading at just over three times annualized funds flow from operations, and we're trading at less than 60% of our core 2P net asset value. In addition, you can see on the chart on the top right, the orange wedge that you see on those bars represents some of the upside associated with just one of our key projects that we're starting to invest in now. And you see we have a lot of opportunity to unlock a lot of additional potential, especially when you compare it to our current enterprise value, which is the black dash dotted line that you see right there. And the fact that we can do it all organically funded from cash flows, I think is quite unique. The last point to make on this slide is that insiders on a basic basis do own over 10% of the stock. So one of our approaches that we've always taken is that we look for the best combinations of geological prospectivity and fiscal regime. We certainly feel like we have this in Brazil. We're operating in a proven hydrocarbon basin with an excellent fiscal regime and a government that's implementing policies to attract foreign direct investment and to increase oil and gas activity. I think it's quite well understood that Brazil is South America's largest oil producer and exporter. But what's greatly underappreciated is that Brazil's importing a significant amount of its natural gas. And when you consider global energy prices, the global LNG market, it really does create some strong fundamentals for our onshore natural gas business model. Obviously, a very big economy, big country. From a fiscal regime perspective, we're paying royalties at a rate of 8.5%. And our project qualifies for a 15% income tax rate. So you'll see how that translates into profitability in a few slides. Last point to make, this really is a unique moment in Brazil's oil and gas history where the state oil company Petrobras has recently basically sold its entire onshore oil and gas inventory. So as the industry continues to open up, I think this creates a lot of opportunities, and we're certainly very happy that we're operating in Brazil. So we're operating in the northeast part of the country in the state of Bahia. It's the Recôncavo Basin. This is the oldest producing basin in Brazil. The first wells were drilled back in the late 30s. You can see on the map sheet here, it's a pretty well-developed area, an extensive network of oil and gas fields. There's highline power, pipelines, two main highways that straddle both sides of our blocks. The basin produces about 37,000 barrels of oil equivalent per day, and about a third of that's natural gas. The main city, the capital city is Salvador. It's tied for roughly the third largest city in Brazil with a population of about 3 million people. You can see a picture of it on the bottom right-hand side of this slide. As you drive way off in the distance in the north and on the southern part of this map sheet, there's a main industrial complex there that's called Camaçari. So the vast majority of the natural gas that gets consumed in our basin or in our region is consumed right in that area. And the nice thing is we're located about 15 to 20 kilometers north of that in the yellow block outlines that you see there. Our core project is labeled Cabaré, and I'll walk you through what that looks like. Again, we accomplished a number of firsts in Brazil with this project, the first independently owned gas plant, the first to sell specified natural gas into the distribution network. And as you can see, we're very well located in the heart of the basin, close to industrial demand. So this is our core project, Cabaré. It was our primary focus to come on production. It started production on July 5th of 2020. The nice thing about this project, it's a unit development, so we're 49% working interest. But the nice thing is all the capital's basically been pre-invested. So 8 wells drilled, all the production facilities are in place. The resource is really well defined with 3D seismic on the bottom right, and you can see the wells on the cross section on the left-hand side. Geologically, what we've got here, if you look at the seismic on the bottom right, the black line running roughly north-south represents the main bounding fault that we have. The vast majority of the resource sits on the eastern side of that main bounding fault. You can see it's intersected by the 6 wells you see on the cross section, and we're producing from that pink or red light shading in the Caraçu formation. There's also 2 wells now drilled on the eastern side of the fault. The unit's been performing quite well. Along with our partner, we've actually increased the originally designed production plateau up by about a third, now up to over 21 million cubic feet a day on a gross basis. And hopefully with the newly drilled well there, we can expand that further. The last point to make here is you can see a link to a virtual field tour on the bottom left of or on the bottom of the slide. There's actually a few different videos on that YouTube channel if you'd like to see what our development looks like. So that takes us over to the midstream and marketing portion of our business. This is a 100% Alvopetro solution. Our gas from the Cabaret unit flows to the west through an 11-kilometer transfer pipeline that we built and into a gas processing facility. And you can see the picture of that on the bottom left-hand side of the slide. We've recently increased the plant capacity up to over 18 million cubic feet a day. The way the plant works, you can see on the very left-hand side of the lease, the gas flows into the facility there along those pipe racks. In the center of the image, there's a mechanical refrigeration process. The condensate from the process goes into those tanks and gets trucked out, and the sales specified natural gas gets delivered on the right-hand side of the lease. You can see the newly constructed city gate right at our physical location. So we're selling our gas to the local state distribution company, which in our case is called Bahia Gas. As part of their contribution to the project, they originally had a city gate right in that industrial complex of Camaçari. What they did is they extended the distribution pipeline network by about 15 kilometers straight north and built this new city gate right at our location. So that's got a capacity of 70 million cubic feet a day. It allows us to deliver gas right into the distribution network and avoid some of those national pipelines that you see very close to our plant. The net effect is about a $2 uplift in our net realized price than what we would otherwise see. The way our gas pricing mechanism works is that the price gets reset semi-annually in February and in August, and it's based on a basket of international benchmark prices being Brent oil, Henry Hub gas in the US, and UK NBP gas prices. That in itself creates kind of a natural hedging effect, certainly way less commodity price volatility than what we see with our peers. On top of that, we layer in a floor and a ceiling. Both the floor and the ceiling get indexed to US inflation. We're currently at $11.28 US per MCF, and that's set to reset again on February 1st. Like I said, this really is a strategic asset or a legacy type asset for us. The key thing is we're now very well positioned to unlock the rest of the gas potential located immediately north of our plant and immediately north of our core project. So talk a little bit about the results that we've been generating. We came on production July 5th of 2020, pretty much right at the expectations that we'd set for the project. You can see we ramped up production. It's been very consistent. We expanded our gas plant in July of this year. That allowed us to set another record quarter in terms of production in the third quarter at 2,642 barrels of oil equivalent per day. That was up 12% over Q2. And October was another strong month for us, up over 2,700 barrels of oil equivalent per day. In addition, if you look at our operating netback, so these are our profits per unit of production. It's measured in the green bar. You can see all through this year, we've been averaging, roughly over $59 per barrel of oil equivalent in green. We had a price increase that became effective February 1st, so that's why it increased nicely. We've got a low-cost natural gas project, 8% royalties. The net effect is that our operating netback margin, so operating netback divided by our sales price, is 87%, and this is best in class. You can see that on the next slide here. When we compare that to 11 of our peers, best in class, about 33% better than the average of this peer group. So really helps underpin our balanced and disciplined capital allocation model. What you're looking at here, the chart on the left-hand side, the green line with the black dots is our funds flow from operations. You can see another record quarter for us in Q3 at over $13 million US of funds flow. The stacking bars just show you how we've allocated those funds flow out. So you can see in the early part of the project, we were very focused on repaying our project financing debt that we put in place. That's the green crosshatched bars that you can see there. In the third quarter of 2021, The dark green bar at the top is the dividend that we introduced. And then you can see not just until this year did we really start reinvesting earnestly in our organic growth, which is the yellow bars that you see at the bottom. So if you consider this from when we came on production in the middle of 2020 until the end of the third quarter, the pie chart on the right-hand side, you can see that almost exactly 50% of our cash flows have went out to stakeholders, which are the various shades of green. A little over a third's been reinvested, and close to 15% has gone towards building cash and working capital to really strengthen our balance sheet and create more flexibility for us in the future. So with that, it takes us to our organic growth plan. We've had a near-term goal of getting to 18 million cubic feet a day. We're already closing in on that, and we've got a longer-term vision of basically doubling that. So where is that going to come from? There's kind of three main areas. There's our existing core operation with our Cabaret project and our midstream assets. Like I said, we've already expanded the gas plant, and we hope to further expand the unit capacity with this recently drilled well. We've got a conventional exploration program. We've successfully drilled 2 wells. You can see them kind of in just to the north of our UPGN or gas plant that you see there, the 182C and 183B prospects. I'll show you what those look like. And then the third leg of the stool is the Murucututu or Gomo project that you see immediately north of our Cabaret field. So I'll walk through each of those. If we talk about our 2 exploration prospects that we've drilled this year, what we did is there's some seismic on the left-hand side of this image that you can see. It just maps one of the key structures, the Agua Grande Formation over the basin. These are pre-rift prospects, so the sands that were laid down before the continent separated. You can see on that map, all the different black lines are all the different faults in the basin, and all the red outlines are all the different pools. So what you can see is that these faults have good sealing capacity. We're in a good neighborhood. We drilled into 2 undrilled fault blocks with these prospects that are outlined in white on that graph, and the well logs are on the right-hand side. So we just finished testing the 183B1 well. The key zone for us, the most prospective one, is the Sergi Formation at the bottom. We tested light oil and natural gas from the upper portion of the Sergi. What's exciting about this, and you can see it in the adjacent well in the 182C2 well, where we drilled deeper, and we would expect this in follow-up wells on the 183B prospect as well, is that the Sergi Formation across our basin is typically about 220 meters thick. So to put that in perspective, that's a 65-story office building. It's a remarkable amount of hydrocarbons packed into a very small area. So we think with the right engineering and the right stimulations, we have the potential to unlock an awful lot of resource here. And we're going to test the next zone starting as early as next week. So that moves us on to our Gomo project or our Murucututu project. Just like those 2 exploration wells, this is also a 100% Alvopetro project. And to put this in perspective, it's probably helpful to just show you how our business has evolved in Brazil here. The very first wells we drilled in Brazil were this 197-1 and 183-1 wells just north of our Cabaret project area, which is the light blue outline that you see there. So what happened is we discovered a very interesting gas resource with these wells. We can actually map it over about 8.5 square miles immediately north of our Cabaret project. But we found natural gas, and no one other than the state oil company had commercialized natural gas in the country. So what we did is we moved down to the south, we drilled the Cabaret project, found some additional gas, we unitized that with our partner, we built the pipeline, the transfer pipeline that you see in red from that unit area, and then built the gas plant, which is the Alvopetro UPGN that you see there. So this was Alvopetro at the beginning of this year. We're now in a position that we could go back and try and unlock the rest of the natural gas potential just to the north of us. So what we've done this year is we've extended our pipeline network up to the 183 location that you see here. We've built a surface production facility to handle all this gas, and we've built another pipeline to tie in the 197-1 well pad. So you can see on the image on the next slide, this is a picture of that facility that was just recently commissioned. This well, you can see the wellhead in red on the bottom of that slide, came on production in October. And this facility has the capacity to add about 11 million cubic feet a day of gas production for us as we develop this asset out. So this is what our multi-year development plan for this asset looks like. Our independent reserve evaluator, GLJ, assigned a combination of contingent prospective resource as well as 2P reserves. You can see that in the stacking chart here. Based on the best estimate case in those scenarios, you can see this asset alone has the ability to basically double the size of our company. We've got this phased over a kind of 4 to 5 year period of time. That with that phasing, we can fund this entirely organically. And the development consists of drilling directional wells off of centrally located well pads so that we can minimize our impact, tie all the production back into that 183-1 production facility that you saw on the previous slide, and then ship all the gas down the red pipelines back to our gas plant there. So we're pretty excited about this. Next steps, we're going to tie the 197-1 well in here early next year, and then it sets the stage for a number of fit-for-purpose development drilling locations. So with that, just to conclude things, why invest in Alvopetro? Again, I think we offer an attractive investment proposition no matter whether you're focusing on value, yield, or growth. We're delivering results well ahead of expectations. Q3 was another record quarter for us in terms of production and cash flow. We've got attractive gas prices with industry-leading operating margins, a clean balance sheet with strong free cash flow generation capacity, and all that together helps underpin this balanced reinvestment and stakeholder return model that we have. For yield investors at our current share price, we're delivering over a 9% dividend yield with dividends paid quarterly in US dollars. For value investors, we're trading at just 3.2 times annualized funds flow from operations and less than 60% of our 2P core net asset value. And that's before considering any of the exploration and deep basin natural gas development upside that we've got on the books. For growth investors, I think we've got a very exciting and organically funded capital program with a lot of high potential near-term catalysts on the horizon, especially when you consider them relative to our existing market capitalization. So with that, I'll go to some questions that we've got coming through the portal here. How many years of actual 2P reserves do you have? Our reserve life index at the beginning of the year was, I think, just roughly 10 years. And the nice thing about our production platform is because the wells at our Cabaret project have more productive capacity than the actual production plateau. We can keep the production, relatively flat without, the same kind of maintenance capital that maybe some of our peers would have to be spending. The next question, after upgrading the plant capacity to 18 million cubic feet a day, has the utility bought all the production to the plant's full capacity? So, we've been delivering just shy of that capacity, but pretty close. We're up very close to the 18 million cubic feet a day. We were just in Brazil 2 weeks ago, and consistent with every other meeting we've had with our off-taker, they're keen to be acquiring as much gas as we can possibly deliver them. So it's been quite a good relationship with them over the first 2.5 years of this project coming on production. Next question, looks like you're undervalued versus peers. What are the catalysts for a re-rating? Well, I think, frankly, every quarter we deliver results like we've got. I hope we continue to attract a lot of interest. Obviously, we've got the organic growth portion of our business that can create step changes in the value. I think the recent 50% increase in our dividend should have turned a lot of heads. But quite frankly, I think we're still trading at a very attractive level relative to the opportunity that we've got in place here. There's a question about our buyback program. I didn't talk about that. We did just recently approve a normal course issuer bid. It allows us to buy back, and we're just finalizing the approvals for that, but it allows us to buy back up to 10% of our public float, which would equate to just under 3 million shares. Next question we have, with 18 million cubic feet a day of capacity, will you actually ever average that number once at capacity, or will it be some less some days as a normal operation? Sorry, this font is very small. Yeah, so no, our goal is, in theory, depending on the gas specification that we're actually delivering into the plant, the plan would be build enough capacity that, even if we had a well intervention or we had some maintenance or what have you, that we'd always be able to be producing at least the 18 million cubic feet a day level. And with success, hopefully we're looking at expanding that plant further. So yeah, no, I think in at some point next year, that's a perfectly reasonable expectation. Next question, how does Alvopetro's natural gas price compare to other suppliers to Bahia Gas? So that's a good question. Obviously our price looks pretty attractive relative to North American gas prices, but if you compare it to the state oil company, for example, they're still charging the local distribution companies probably 25 to 30% more than what we're receiving. If you look at it relative to importing LNG, it's a significant discount. So I think that's part of the reason why the gas off taker is keen to take as much gas as we can possibly deliver them. So the rough timing for the long-term 36 or 35 million a day of capacity, the longer-term vision, I think if you look at if you extrapolate that chart that I showed from our Murucututu or Gomo project, you can see that's, that project alone could deliver that, but it's over a couple year period of time. And in parallel, we would be expanding our gas processing capacity over that same period, and it would be naturally a bit of a ramp up from a well deliverability perspective as we drill out more wells. One other question, just with the repayment of all your debt now, that leaves a lot more room for returns to shareholders as opposed to repaying debt and interest. I think that's a natural observation. Obviously, the level of our dividends is subject to our board's discretion and approval every quarter. But yeah, we're pretty happy that we're debt free now. If we continue to deliver results as strong as we have, there's certainly an opportunity to either start to utilize the normal course issuer bid in more earnest. We have the capacity to potentially look at dividend increases, and it does also create even more flexibility from a capital spending perspective as we move into next year. On a scale 1 to 10, can you rank what you think your opinion of the test results from the recent exploration wells is? So, yeah, to be fair, I'm just going to back up the slides here just so I can talk about this. So we did have a multi-zone these were multi-zone targets. So I talked about just finishing drilling and testing the 183B1 well. The Sergi zone here, again, just given the sheer amount of hydrocarbons that are in place, is quite exciting. Obviously, 60 barrels of light oil doesn't sound that exciting, but when you apply kind of a multiplier effect, if you will, we think there's a lot of opportunity in that zone. To be frank, the Agua Grande zone above it, this is a zone that came on. There was a very high porosity zone at the very top of this. We were extremely excited about this when we first brought the well on production. It was producing at close to 6 million cubic feet a day. The challenge is it declined very quickly. So what that tells us in that structural location very close to the fault at the very peak of the structure is that we just don't have a lot of aerial extent to that high deliverability zone. Now, the good news is when we drill additional Sergi wells, we're licensing 2 additional locations off the existing pad. We get to drill through that again and see what that looks like. The Candeias zone at the very top of this, again, good porosity. It was a bit of a bonus sand. We weren't even expecting this, but again, it looks like it's kind of lower productivity, higher water cut. So I would say, we're excited about the Sergi. We were initially excited on the Agua Grande, and then became somewhat disappointed, to be frank. And we're looking forward to testing the next wells here. So hopefully that answers the question. And with that, I think we've reached the end of the questions and our time. So I want to thank everyone for their participation, and feel free to call me if there's any questions that weren't asked